Welcome to the Deep Dive. We sort through the noise to find what really matters. And today, we're diving into some key sources, really centered around an article by Homeira Oroujzadeh. We're looking at the future of artificial intelligence in, well, managing financial assets. Now, obviously, AI offers some exciting stuff, analyzing data faster, those robo-advisors popping up everywhere. But the sources we have today, they really put the spotlight squarely on the risks, the big concerns we need to talk about.
Yeah, absolutely. These sources, they lay it out pretty clearly. All that potential comes with serious technical issues, security risks, even structural problems. So the big question we're tackling, I think, is, are we actually moving toward a future where algorithms just completely run our finances? And, what does that really mean for us? The implications are huge.
Okay, let's try and unpack that. Starting with what the sources call technical vulnerabilities. They paint this picture of incredibly complex AI systems in finance, suggesting that even like a tiny mistake in the code or maybe a slight bias in the data it learned from, that could blow up into something catastrophic. Yeah. Can you maybe walk us through what kind of scenario we might be talking about there? Like what could actually happen?
Well, imagine this. Just a small software bug, right?
Yeah.
It could suddenly make the system trigger massive sell-offs. Huge amounts of stock sold really fast across different platforms. And that's not just a minor glitch. That could almost instantly cause wild market swings, huge losses for investors. Or think about APIs, application programming interfaces. They're sort of the digital pipes connecting different financial systems. If there are vulnerabilities there, well, that's like leaving a door open for hackers that could potentially get in, access sensitive information, or even, execute fake transactions. Big ones.
Right. Okay. So those are internal weak spots. But the sources also flag external threats pretty loudly, like cybersecurity breaches. How do those specific risks look when we're talking about these really advanced AI trading systems?
Well, hackers are always looking, always probing for weaknesses. If they manage to breach an advanced trading algorithm or maybe the cloud system holding all that financial data, it's like they've found the master key to a giant vault. And it's not just about stealing data anymore. It could lead to really sophisticated manipulation of trades or even shutting down entire financial operations. That directly threatens, the stability of the market itself and people's confidence in it.
Hmm. Okay, one of the things mentioned that I found, well, really interesting was this idea of the black box. I mean, how do you even audit a trading decision if the people who built the AI can't fully explain how it made that decision? It sounds a bit like magic, but maybe dangerous magic. What's the deal with this black box in finance?
Yeah, the black box basically refers to these AI models, especially the deep learning ones. You feed data in, you get a decision out, but the process in the middle, it's so incredibly complex, it becomes opaque, hidden. Even the developers might not be able to trace the exact logical steps the AI took to reach a conclusion. And in finance, that lack of transparency is, well, it's inherently risky. If an AI makes a bad call, recommends a terrible investment, causes huge losses, trying to figure out who's responsible or even just what went wrong becomes incredibly tough. When you can't understand the why, it really undermines trust, not just for you or me, but for regulators, for the institutions themselves.
That makes sense. That lack of knowing why definitely makes holding anyone accountable very tricky. What about the financial firms using these tools? What happens if they start leaning too heavily on these algorithms?
That's another significant risk the sources point to. It's potential degradation of human skills, human analytical skills. If institutions, if their analysts just start relying completely on what the algorithm spits out, human expertise might start to fade, atrophy almost. And it's not just about one person getting rusty. It could mean the whole financial sector becomes less adaptable, maybe more fragile, especially when faced with something truly new, some kind of economic shock algorithms haven't seen before. Having that human in the loop isn't just a backup plan. It's about having dynamic intelligence that can adapt in ways algorithms currently can't.
That's a really crucial point. The sources also touched on something related to the concentration of power. If only a few giant tech or fintech companies control the main algorithms everyone uses,
Yeah.
how does that become a risk for the whole system?
Right. If you have, say, just a handful of major players dominating the algorithms that manage a huge chunk of the world's finances, the entire global economy becomes incredibly dependent on those few companies. So any problem, a glitch, a security breach, a bad update within one of their systems could send ripples or even waves across the entire market.
Right.
It concentrates risk massively. Plus, it creates the potential for maybe information monopolies or even coordinated market manipulation, perhaps unintentionally even, just because their algorithms react similarly. It makes the whole financial world quite vulnerable to single points of failure.
Okay, bringing it down to the individual level. Let's say I'm thinking about using a robo-advisor for my savings or investments. What are the specific impacts or challenges for someone like me relying on AI in that way?
Well, for you, the user, the most obvious thing is probably a partial loss of direct control. If the system makes a mistake or if it gets hacked, your ability to access your own money or make quick changes to your investments could be temporarily blocked. But there's another point, maybe more subtle. AI typically operates based on patterns and data. It doesn't always fully grasp the nuances of human life. Things like your specific personal values, maybe ethical considerations about where your money goes, or your precise long term goals that aren't just about maximizing returns. Even how you personally feel about risk in a sudden, unexpected situation. Those are things a good human advisor would discuss and adapt to an algorithm. It might just stick to the pre programmed path.
That's interesting. The human element still seems pretty vital there. The source has also specifically highlighted the cryptocurrency market. How did these AI risks maybe get amplified or change in that kind of environment?
Yeah, in the crypto world, these risks often seem much more intense, magnified, really. Take high frequency trading, for example. Those bots making thousands of trades a second. They can drastically increase price swings, the volatility. We've also definitely seen bots designed purely to create false signals, fake buy or sell pressure, just to manipulate prices for profit. And another big thing is many of these crypto trading algorithms are trained heavily on past price data. So when something truly new happens, a major regulatory crackdown somewhere, or a big geopolitical event, they often struggle. They weren't trained for it, so their performance can suddenly become very unpredictable or just plain bad.
Wow, okay. So beyond the tech side and the market specifics, the sources also raised some pretty big social and regulatory challenges, didn't they? What kind of things are we talking about there?
Absolutely. One major concern is inequality. If these super advanced AI financial tools are mainly accessible only to large corporations or very wealthy individuals, it could definitely widen the gap between the rich and everyone else, make economic inequality worse. Legally, as we touched on with the black box problem, that lack of transparency makes assigning responsibility when things go wrong incredibly difficult. Who pays when the algorithm messes up? And maybe most importantly, right now, there's a real lack of clear, comprehensive rules globally for how AI should be used in finance. This kind of regulatory gap is a risk in itself. It creates uncertainty and allows for potentially risky developments to go unchecked.
Okay, so we've laid out quite a few significant challenges and risks here based on these sources. What's the big takeaway then? Should we just be, scared of AI in finance, or is there a constructive way forward?
I think the sources consistently frame it as a double edged sword. That metaphor comes up implicitly a lot. AI definitely offers huge potential benefits, efficiency, new insights, maybe better access for some. But the risks, technical, security, ethical, systemic, are very real and very significant. So the key message seems to be about finding the right balance. Smart, responsible integration. We need to encourage innovation, sure, but at the same time, we absolutely need robust regulations. We need high levels of transparency, and we need precise oversight mechanisms. Crucially, the sources argue the human role in making the final call, the final decision, needs to be preserved, not automated away. Things like independent audits of these AI models become essential, and also just broad public education so people understand what AI can do, but also what it can't do, its limitations. Ultimately, the goal shouldn't just be about maximizing short term profits, it should be about using AI's power to try and build a financial system that's safer and hopefully fairer for everyone.
Right? A double-edged sword that needs very careful handling. And that really leads you, our listener, with a pretty fundamental question to think about. As AI gets more and more involved in managing personal finances, your finances, how much control are you actually willing to give up to these systems? What do you stand to gain? Is it mostly convenience? Maybe the potential for better returns? And maybe the most critical question, in this rapidly changing financial world, how can you make sure that your own interests, your personal goals and values stay firmly at the center of it all? That's definitely something worth pondering, and the answer might look different for each of us.